Hello and welcome to Trading the Trend. The question we always ask every Thursday is, what trend are you riding? It's not just being invested. Are you actually in some of those areas that are trending to the upside? We got Michael Fairborn in the chat. We welcome him. And we also have Ray from Cambridge, England. My gosh. You haven't been to Cambridge, the University of Cambridge. That is a good place to go. I went there and tried to meet the great F.F. Bruce, if some of you know who that is, the biblical scholar. And good man. So we'd like to welcome everyone here. By the way, Oxford's nice too. SJS Photography. Hello, Jeff, Will, Mark, Ricebird, Silas, and many others. Welcome to all. Now, just real quick as we're getting started. Now, by the way, if you haven't noticed, the British pound went quite a bit lower this morning, which is kind of nice because, well, the target hit last week. So if you're thinking about it, geez, England, it is a little cheaper this morning. So there you go. So just remember, when we talk about examples here today, it is done for example, illustrative purposes only. When we talk about stocks, remember that all of investing has risk. And also remember, when we bring up options examples, remember that they can carry a high level of risk, not suitable for all investors. Also, when we talk about options, remember the option Greeks measures a sensitivity towards something, whether it's delta, gamma, theta, vega. And also remember, when we talk about short options, those can be assigned at any time prior to the expiration amount. So that's what American options are. They can be assigned, okay? European, no. American, yes, okay? Now, today, as always, we're going to talk about just real quick market and sector briefly, 3-4 minutes. Second, I want to talk about some current examples. And then third, I want to talk about our current existing positions. And I'm going to show you what's in those two accounts. And I'm going to ask you, are there any trades you want to review? So let's go ahead and kick this off. Kind of an interesting day in the market. I'm going to bring up first off, well, this is the chart we left with from the trading futures class this morning. I thought it was interesting looking back when someone talked about, well, what about the line of resistance of 72.62? It was just kind of interesting. Probably within 60 seconds of the person saying that question, the price smashed through it. Okay, I don't know if anyone got that. Now, you're going to see that when we look at the SPX, the moving averages we have on the chart are what's called the whole moving average lines. They're faster than exponential moving averages. They're weighted, okay? And you got a 10-period moving average and you got a 20-period moving average. So I kind of, when I think of, when I look at with the price and we're looking up at the moving averages, in my mind, I'm kind of thinking like it's raining in the market, okay? Now, you don't really see a crash and burn to the downside. It's just kind of like raining. It's an overcast, clouds, okay? So in this type of condition, we might talk about things like covered calls or callers to protect. We could talk about exiting and so on, okay? Now, if we look at, let's say, the NDX, same thing, okay? Now, by the way, we did a hedge on the S&P, a small one, but we're kind of trying to have some protection going in over the non-farm payroll number. Now, you might even say with the silver example we did, could that be a hedge as well? Yeah, maybe, okay? We pull up the Russell, not a whole lot to say there. So there's 3 out of 3 indexes that are kind of falling down below the moving averages. And there's the Dow Jones finally starting to pick up some steam to the downside after a very flat move here. Now, when we already showed crude, I want to kind of also show you that it's not just crude oil itself, but you're also seeing, let's say, Brent crude as well. Okay, there's Brent. You're also seeing it in gas. Okay, gas. And you're also seeing it in natural gas as well. Keep an eye on natural gas. Natural gas has gone up quite a bit. This would be like reflective of some natural gas companies. Many energy companies do oil and gas, not just natural gas. Keep an eye on that. Now, when we take also a look at, let's say, where silver was this morning, where it is right now, a little thrusting. That's going to be the word of the day for us right now. Thrusting to the upside on that silver. That's kind of been interesting. Keep an eye on that. We said it didn't really go down that much, okay? So that might fall into some of our examples. Do you have any silver stocks that we might address? Now, briefly, when we take a look at, let's say, the sectors, when we talk about on Monday, some geopolitical risk in the market, was it Monday? No, it's Tuesday. Okay. You're going to see the energy. It's been hot since Tuesday. It's continued. Okay. When you look at the utilities, hit a brand new high here today. The thing that we would say with regards to utilities, be very careful on some of these right now. When you look at staples, taking a pretty good beat down, okay, price dropping, I should say. And if you look at, let's say, even healthcare, that is also dropping quite a bit. So we got to be mindful of, do we have some exits in those spaces? Because if you look at the sectors, you're seeing pullbacks. My concern is if you actually, and probably yours too, if the staples are going down, the real estate stocks are going down, the healthcare stocks are going down, could utility stocks get drugged down as well? Now, as I just said that, we talked about Constellation Energy yesterday, and that stock went back to the upside, just up a measly 12 points or 4%, okay? So it's not everything, but there are some, the sector of utilities, I think it would be maybe prudent to maybe, let's say, raise some stops. Speaking of that, let's go to the paper money accounts. So we have a margin account with that balance, and we have an IRA account with that balance. Now, the question, what I want to ask just briefly is, do we have any, let's say, healthcare, staples, utilities, real estate? Do we have anything like that? I'm going to open the ones that are stock related. So if we look at, let's say, AbbVie, we have AbbVie, the shares, they're up a little bit. And then we have a short call. If we had shares in the short call, there's what's known as a covered call. The downside, what you're going to notice is, we look at this, we also have a bought put as well. So if you have a short call and a bought put and you own the shares, that is your caller position. So not a whole lot of concern there because that's protected. Do we have anything else in here that is staples related? Procter & Gamble, staples / healthcare, okay? It is also collared, 170, 165, okay? Still got 15 days left. What about Simon Property Group? 100 shares of stock, unprotected, okay? So let's pull this up and see what we have here. Is there any signs of exiting on the chart as we speak? Now, if I come to this, okay, and remember, we're going to try to make the selling very simple, okay? One is going to be that the shorter term moving average goes red, put a check mark, we already have that, okay? If someone wanted to sell out, that happened days ago. 2, if that moving average crossed, okay, that is 2, that's already happened, check. And the 20-period moving average has not gone red yet, okay? Now, if you told me, hey, James, I kind of like to be in this stock. I know maybe kind of we're getting some pressure. Shorter-term interest rates are going up a little bit, maybe some pressure on the real estate stocks, and I have 100 shares. Can I maybe collar this position? Oh, how do you do it? Okay, so first off, where's the stock price right now? Okay, so stock price sitting at 167.59. This is why starting out with a stock that is liquid to begin with is so critical. Some investors won't even buy shares of stock if the options aren't there, because they want to know if something were to happen with the stock or something were to happen in the market, at least they could try to have a greater chance of liquid options to protect it. Okay? So kind of think of it like a real estate investment, a house or personal house. You buy it, but then they tell you, but you cannot protect it. So it's all self-protected, meaning if something were to happen, it's all on you. Does that influence the price you would pay for the house and or stock? I think the answer is yes, okay? So in our example, Simon Property Group has 275,000 traded so far, not massive. And if we go down to, let's say, the November, because we want 20 to 50 days to expiration, we're going to look to sell the strike that is the first one out of the money, okay? And if we go back and look at this, we got the 170 call, we got a 520 bid, okay? We're going to sell that first one out of the money. Where's the stock now? 167. Selling the 170. Buying the put below us. Okay? Buying the put gives us the right to sell. Now, I want us to come down here and look at this delta, okay? So think of that delta as the directional sensitivity to a $1 change in the stock price. If you want less sensitivity, you can overlay options on top, like this, and you can make that delta less. We're going to show that. We're going to right-click on the 170, sell. We're going to go to where it says collar synthetic. And if we take a look at this now, sell, we're going to just buy the 165. Okay? Now, here's the thing we got to remember. If the stock goes to the upside, the position is like a covered call. You have an obligation to deliver the shares at the strike price from the time you enter until expiration. The stock goes down. The position, it really acts like a protective put. You have a right to sell the shares at 165. If this stock stays flat and we're in between those strikes, pretty much they offset and the investor still has the stock. Now wait, could they still get the dividend if the dividend is paid? Yes. Okay. Confirm send. Now, do we have a credit? Is it a credit or debit? Well, it's a credit. Okay. And also we're paying a commission of $1.30, 65 cents to sell the call, 65 cents to buy the put. Net credit, 68.70. Okay. Send. So on that one, now when we go back and take a look at this, feeling a little bit more comfortable now. Okay. So when I go back and say Simon Proper Group, where did you go? It's right here. I'm going to move it up to that group. So when I look at some of these, like, hey, healthcare, the sector's going down. Healthcare / consumer staples, it's going down. It's protected. Simon Property Group, it's protected. Now, the only other thing I can see in here that might be somewhat staple-ish or whatever is T-Mobile. But that's kind of like technology, discretionary. Got a little blend here. So we don't have any exposure to any other of those sectors that are really kind of getting pressed down. I'm just double checking. The answer is no. So in the margin, no. In the IRA, no. So when we look at the sectors, it's not just for like where we're trying to waste time. We're trying to say, do we own any stocks in those sectors? And if we do, is the investor going to exit, or is the investor going to maybe consider protecting those shares? Any questions that you have? Okay. Something about the Mets. I'm not sure. Yeah, the Mets blew it last night. All right. Yes, they did. Okay, now Wiley brought up something just real quick. So it's a couple ways two main ways you could look at this. If you brought up /6B, that is the British pound. Now, the British pound, that's the British pound relative to the US dollar. And what I meant by that is the British pound dropped quite a bit, okay? And so they are kind of being in a situation where they're kind of being forced, perhaps, to cut interest rates aggressively. Cut the interest rates aggressively. Sometimes you can get your own currency to drop, okay, as you're not getting as much to stay in it, okay? So that's what happened last night. Now, that's the British pound, okay, over the US dollar. That's what we saw last night. That's what I was referencing, and that's what Wiley was also saying as well. Now, I want to go back to something that Shiva is asking. So what I want to do is I want to take a look at, now I want to give kind of full disclosure here. And I'll be honest, Mike knows this. Mike, could you kind of speak up here? Mike, I grew up in New York. Okay, I grew up in Ithaca, New York. My dad taught at Cornell. And the way I grew up is the way everyone there was pretty forthright. And sometimes you didn't even have to ask them. Okay, they just told you. And Mike knows that as well. Now, so here's the deal. I try to be very transparent. Okay, when someone's not transparent, it makes me nervous. Okay, why are they not transparent? So what I want to do is, with that comment, what I'm trying to do is I'm trying to show you exactly what are the positions in the portfolio. Okay, so when you look at this IRA account, we don't have any cover calls. We got a couple short puts. Now, by the way, there is a position. I'm going to open this. That is right there. That's a staple position. We need to talk about that. I'll open that right there. Here's a vertical, okay, that we could bring up, or at least two different sets of them. And you got some long verticals right here. I don't see any staples. The only thing I can really see staples is probably going to be Costco, like you're buying staples. Now, Shiva's question is, can you touch upon the exit strategy for verticals on the downside? So like, could we use like a 1, 2, 3 strategy as well? Sure. Okay. Absolutely we could. Now I'm going to go back. So we have a long vertical. So a long vertical is you're buying the lower, if we're talking about long call vertical, buying the lower strike call and you're selling the higher strike call. Okay. Now the way what you want is you want the stock to be at least above the call that you bought. And the way you make the maximum gain is you're above the strike that you sold. Now, here's the problem. You actually have the stock at 873. We are below both strikes. Boo. And now we're sitting at where we have a loss unrealized of 315. Okay, now, when we take a look at this, we don't really need to really be thinking about, man, I'm going to get out if I only see the shorter term moving average go red. Okay? That's on a vertical, that might be a little overdone. Okay? So when we take a look at this position, and why is it overdone? Probably. Well, because when you look at, let's say, a vertical, this vertical has a delta of 32. The sensitivity of the options given a $1 change in the stock price, $32. So if we go down $1, that position would lose about, and actually, excuse me, that's Apple, it would be about 7. Okay? So if we start to see the stock's down $1, the option net is going to be losing about $7. The stock goes up $1, net approximately $7 to the good, approximately. So do you need to kind of really say, I'm going to take aggressive exits on verticals? Not necessarily, because you're on both sides of the trade. You're long and you're short. Okay? Now let's go back and see. It's not hard to see it. You know what's really hard? To do something with what you see. Okay? So if we take a look at this and said, okay, where on this chart did we actually see the signals? And not did you see it, what did you do with it? And that's the whole thing. There's one. Let's put a little check. Problem is, there's your 20-period moving average. That was even the day before. That is unusual, but it still happened. And if you look at the crossover, which is also unusual, it happened back here. So this is like backwards here. Okay? 1, 2, 3. So it's kind of been after the earnings. It's been in a 3 condition since. Paper money count didn't do anything. The very next day, down. Very next day, down again, below the moving averages. Red hue there, red shading is not your friend. Red shading typically means, what's the prediction? The prediction is pain, okay? Now, if we actually go down, pain some more, and pain some more, and pain some more, okay? So if on that number 3, which we had, if the investor doesn't get exit, you're probably expecting that what is the maximum loss in this position? There's a really good chance I'm going to start to test maybe a good chunk of that maximum loss. Now, what was the debit there? The debit there, if we take a look at that, is $5.40. Okay? That was the debit. Okay? You paid this. You collected that, and it's $5.40. Check me on that. Okay? You got a $10 wide spread. 10 minus 540. So the most that we can lose given a vertical, that's a very important comment, given a vertical is 460. We're at 315. We're right now 75% of the way down maximum loss creek, okay, if you will. We're down 75%. We could only get about another $150 to the negative given the vertical. So we kind of have more upside left than we do, let's say, max loss. So if you realize, my gosh, we could only lose another 150 more bucks given the vertical, but I could get all the 307 back and then maybe make a maximum gain. The investor might say, my opportunity to sell here might have been a little late. Does that make sense? Because if we bail now, all we do is lock in the 75% loss. Okay? It can only turn into 150 bucks more loss because the max loss is 460. We're at 110. That's 150 difference there. And then I can get the 310 back plus the maximum gain. So the investor might say, I'm willing to risk the last 150 bucks to see if it does bounce. Does that make sense? Now, I want to go back to the comment I just made, okay? Which is, it's not that you see it, it's what you did with it. So on Costco, I'm not going to touch it. Not going to touch it, okay? So if I went back to, let's say, well, what do we see, let's say, on Tesla, okay? If I look at something like Tesla, what is Tesla? Well, you got a 220 put, you got a 215 put. Okay, well, this is positive. I'm going to take the gain. Well, I mean, are you trading a signal or not? Are you just trading like profit, or what are you trading? If I pull up, let's say, Tesla, and say, what do we see on Tesla? If I was going to trade like on a 1, 2, 3 methodology, take this and say, okay, what do we got? On the hard right edge, okay, we're just going to label it as 1. However, you also had, tell me what I'm missing, you had also the moving average cross as well on the same day, okay? So the shorter term moving average went red, and there's the cross. Next, go for the very next, there's the lagging moving average. So yesterday, the investor could have said, hey, look, I am going to sell out. Now, where are we today? Okay? Well, if I went forward and actually said, where are we today? We're even blasted lower. Now, are we still up? We're up a couple bucks, okay? How much couple bucks? Looks like we're up about $310 on those 4 contracts. So if someone said, I'm going to trade the verticals just like we do with stocks, here's an example. The example could have been from yesterday. That gain could have been better than the 320, but here we are now. Now, here's the deal. A lot of times, the investor is kind of, geez, should I sell? I spent so long to come up with this one trade idea, and if I sell it, I got to start back over. That usually comes because the investor doesn't do quite enough practice and maybe understand what those signals are. There's going to be lots of signals. We're going to create a closing order, buy that back. We got in for a credit. We're going to give some of that credit back in the form of a debit and say confirm and send. Now, I don't know about you. Now, let me just double check this. Is that $310? Yes, it is. What is actually down a little bit for us? Okay, so if I looked at this one right there, and there, are we up or down? Well, I'm not going to get out, the investor says, because I'm losing on that one. If I get out, that means I'm a loser. That doesn't mean that at all, okay? Now, remember, you're trying to put bullish positions on when you're in that green color. Okay? When they go red, you don't know where that dadgum bottom is. Okay? So you're trying to stay out of the way when prices are falling, meaning you're trying to have the capital potentially more on the sidelines, waiting for those entries to come back. Okay? Now, if we go back and look at Tesla, we're going to right click on this. We're down how much now? I'm only going to get out if I can break even. Oh, is $30 really going to matter? Probably not, okay? We're going to right-click, create closing order, buy that back, and there's the debit right there for the 4 contracts. Note the commission, check, add that, send the order. So again, what we're doing is when we start seeing that red shading, now the question was, what causes the red shading? Answer, okay? It's number 1, when the moving average, the 10 period crosses down. That's a start. But the red shading really happens when that 20 period moving average also goes red as well. Just like you see here. The 10 period moving average, just because it goes red, there was no red shading. The red shading starts when the moving averages cross. When does that shading start to magnify? When that 20 period moving average also goes red. And that's where you now start to see some thickness on the shading in between the moving averages. Okay? Now, Owen says, but theta. Okay, so Owen, are you asking, well, so first off, when are you likely going to get theta? Okay, we got to think about this a little bit. When are we likely going to get theta? When volatility is going up or volatility is going down? Tend to get theta when volatility is going down. If volatility is going up, you don't tend to get theta, okay? Now, speaking of that, example given, Procter & Gamble. Let's speak to that question, okay? So if we look at Procter & Gamble, sold it for 214, it is now at 327. Okay, so let's kind of take a look at this. Let's use this as an example. Now, if I look at this cash secured put, and remember, it's in one of those areas we're concerned about, healthcare, staples, you name it. And if I said, hey, I ain't going to get out because it's theta. Well, let's take a quick look at this. The October expiration, the 170 put. Okay, so here it is. There it is right there. Okay, now I'm going to create one of these column headings and we're just going to go to where it says Theo price. Okay, so right up here, change one of the column headings to Theo price. And what I'm going to do is kind of throw out a little example. Let's imagine a week goes by, and we go to October 10th. Now, we're assuming that if a week goes by, hey, we should have some time decay. Fine. And it goes from 320 down to 238, and it's pretty nice. Now, why does it collapse so fast like that? Well, you got to remember, we only have 15 days left to go. So that time decay, like the ice cube, is burning faster and faster and faster as it comes to expiration. Fine. However, what happens if that volatility, now I want you to watch this number right here, 236. If I spike up that volatility, this is not volume, 5%. Watch what I'm pointing at, 236. It's 286. So where'd the other 50 cents go? The daggum volatility in the shorter term ate away or offset, I should say, the impact of theta decay. Now, between the cash secured put and the vertical, which one is more susceptible to that scenario? The cash secured put, okay, for sure, because you're short, you're naked. You don't have anything to offset it. Speaking of that, if the investor says, I don't want the obligation to buy those shares, okay, if someone said, James, I don't want the obligation of buying these shares and I don't want to hold this over earnings, I would rather take the $100 loss and not have the risk of buying $17,000 worth of stock. Now, if the investor says, no, I actually wouldn't mind to buy the stock, well, that's different. If they said, no, I have other things I want to do, I don't want to buy a stock where the neighborhood is declining. How do I rip up this contract? Answer, well, you rip up the contract by buying it back. Now, the goal is not to buy it back when it's higher than what you sold it for. But if that's the case, we know A, the stock went down and volatility went to the upside. So if you're saying, I'd rather take the $111 loss than be assigned to buy the shares at the strike price from now, not just expiration, from now, okay, from the time we put this trade on, and it could even be right now, we're going to buy this back. Create closing order, buy it back. Now, the other part of this is when markets drop, okay? When markets drop, one of the worst feelings is when the market drops, you might say to yourself, my gosh, I would love to buy some things right now, but I ain't got any money, okay? And all my money is tied up in losing positions, and I hope that I can just break even. I'm telling you, I've been there. I've done that. It's the worst situation. You finally get a nice sell-off, and you ain't got $5 to buy anything because all your money is tied up in positions. So when things are starting to fall, some investors say, look, if I'm going to have short puts, I might only have 3 of them because they're trying to save some capital for other positions that might be at, let's say, a more interesting level to buy than just to hold on, hoping it comes back. Okay? Confirm send the order. Now, on that PG, we have that same idea as well. Moving averages red, nearing the cross, yes, on that as well. Now, let's go to some new positions, okay? So let's kind of first off take a look at a little chevron, okay? Now, last week, the word of the week was channel, and we want to kind of take this forward just a smidge And what you're going to see is we kind of have, and I'm not going to say it's perfect. I've never seen a pattern that's perfect, except for in a book, probably by someone who never even traded, okay, or very limited. They're maybe better at writing than they are trading or investing. I mean, I'm just saying, okay? Now, if we take a look at this, maybe that 148 might be that line of resistance. The next level, okay, is probably right around 152, which the intraday highs, poked here today. Now, you got to remember something. If crude oil goes up 5, 8, 10%, might that have a material impact, potentially, on the energies company's earnings? Perhaps. Okay, that's the idea. Now, what we're going to do is we're going to kind of say, if it can get above that 152.5, could it go to the top end? Okay, now, what I'm going to do is a stock trade. So I'm going to imagine that we had money tied up in PG. We said, man, this sector is horrible. We're going to actually switch the money from PG and try to get something that's actually now moving. Now, remember with PG, the price was below the moving average. Hasn't been a recipe for making money. We're going to try to pick something up the other side, which is where we're above the moving averages. Can we get the trend behind our back and help us go to the upside? So what we're going to do is a little swing trade action and try to get it to go up to the top of the channel. Right click on the chart, buy custom with OTO bracket. Is this a stock and option trade? It's a stock trade. Okay, there's no expiration, no strikes, stock trade. Now, what I'm going to do, okay, is we have the price at 151 and change. I'll unlock that so it's floating with the current price. Limit order, what I'm going to do is I'm going to put that limit order right about 159.90 or so. Okay. Limit dated GTC. Okay. And then a stop. Now that where we kind of been the last 2 days, right around that horizontal line, 148.79. Okay. 148.79 less 2%. And now what you're going to notice is 145.81. Okay, so here it is, dated GTC. Okay, now, what you're now going to notice is we're going to do this in the IRA. This is not too big of a position. It's not. You can buy $15,000 worth of stock. $15,000 in stock on an account that's $247,000. It's going to give us about 6% capital of the account. It's not too big. Okay, below the threshold we talked about. Confirm send. Target there. Stop there. Not a commission to buy the shares, just the capital. Okay. Now, always read what's in red down below. Send the order. Now, wait, James, on Tuesday, didn't we actually go long ExxonMobil? Yes. Do you have anything to say on it? Brand new high intraday here today. Higher close so far. If we close here, haven't maybe done that little continuation to the upside, but this is what it looks like on the weekly chart. The only comment I want to emphasize is before the bottom of the channel was here. Now the bottom of the channel is here. And if we're making higher support levels, the chances of us breaking to the upside become higher. Else, why wouldn't it go down to the bottom of the channel? Now, the other thing that kind of goes back to, which is when you're in a trade, what's kind of giving you the idea that that trade might work? Well, for trading energy stocks, I'm watching what the commodity is doing itself. So if we're trading Exxon, going to be watching crude oil itself, CL, okay? You don't have to trade the future, but I mean, that's what you're looking at. Second, you could be looking at natural gas, okay? Those would be two paramount things we really be looking for, okay? Now, and I mean monitoring that and saying, how is that maybe going to potentially affect earnings itself? Now, I want to also go to, for example, NVIDIA. And if I looked at NVIDIA, and I'm going to kind of go back to kind of where we are about right here, okay? And I'm going to kind of strip this chart, and what I'm going to do is kind of draw maybe just a quick line, okay? So we kind of had maybe like a little pennant there after a big, huge rally. I know you wish you would have bought when that moving average line was green and the green shade was there, okay? But we overthought it, right? And then there's no way it could keep doing that, and it went up some more. And we overthink it. The green shade means sell, and the red means buy. Does it? Okay. And lately, we've been in a situation where the moving averages have been below, the shorter term moving average has been below. Okay. So we've kind of been making a price pattern. So a lot of times when you make a price pattern, whether it's an ascending triangle or a symmetrical triangle, man, the price is just zigzagging. Okay. Not a whole lot of consistency. That's kind of what's happened on NVIDIA as of lately. Now, give credit where credit is due. If you go back and kind of take a look at this, and if I could draw a straight line, we kind of might say, look, maybe could we be getting near the end of this symmetrical triangle pennant pattern, and could we finally, okay, the moving averages are green, okay? The shorter term moving average is green on the weekly chart, okay? And now if I actually go back to the daily chart and I'll draw back that channel, which we had from before, today it gapped up $2 or $3, okay? And the reason why that was significant is it went back inside the channel. Now, if we kind of said, look, I don't have the top of the channel being 135, I have mine being at 130, okay? Now, we got to remember something just real quick. When we look at, let's say, what happened so far today, it poked back above. So sometimes when you see the price fall down below support, you want to look and see how long did it stay down below support. And if it's a shorter number of days in duration, let's say it's only 1, 2, 3 days, and the price snaps back to the upside, that's good. If you see, for example, investors are buying below support, there's only one reason why you buy below support, okay? You think it's going to go higher, okay? Now, what I'm going to do on this trade is we are going to expose the paper money account to volatility risk, okay? So if the investor says, James, I want to sell maybe like the 115, I think the investor says, I think it could stay above 115. And here's what you have to make the decision of. Do you want to really own those shares? What if you said, well, I don't mind owning the shares if the stock is staying above 115, but if we go below 115, I do mind. I want to exit. So how do you set up a cash secured put and set up a buyback order? Okay, now let's do that. We're going to go to the October expiration. Okay, so we're going to go to the October expiration. Look at that first. It only has 15 days. Denied. We need at least 20. Want that. We're going to go to the November expiration. There. Where's the 115 strike? Let's give a quick look. 115 is where we had the support level. If we take a look at that, that's the 115. The delta is 31. So that's the bottom end of the range we normally talk about. Premium 485. Premium 485 divided by a stock $122 and change, survey says 3.97%. Now, we know that's a little higher than normal. A, because we have more days to expiration. 2, implied volatility. Okay? Now, higher percent or return on risk doesn't mean better. It just means, hey, it's forecasted to move more. Okay? That is also why we're trying to sell a little bit farther down on this strike. Now, we're going to right-click on that bid. We're going to go to Sell Custom. We're going to go with Stop. Okay? Now, my paper money account has been freaking out. Okay? I'm going to change this. I'm going to probably regret this, okay? Market and then data GTC, okay? So what this is it's saying sell that NVIDIA, sell that 115 put. Yes, the paper money account will be obligated to buy those shares from now to expiration, but you got to give us something. You got to give us $485. Now, the only way you make $485 is go all the way to expiration. The only way you can get a chunk of that is the stock has to go up in your favor, a good chunk, and bleed that time decay. Now, if I did this all the way over to the right, click on that gear, please. I'm nice, okay? It didn't work, and it locked up. What you want to do is you want to go to the right-hand side. You want to click on that gear right there. It's going to bring up a pop-up page. And on that pop-up page, you just want to click on Mark. Let's click on the symbol, NVIDIA. Mark, enter below, and then type in the price. Now, what we're going to do is we're going to say, look, if we go to, let's say, 114 or less, buy that option back. So at that point, you're saying that support level so far is not holding. If we get down below 115, now we're obligated to buy a stock that is sinking and it's not holding the support. How do you know that stock can't just go down and then bounce right back up? It totally could. So you got to understand something. If you do this and don't let the probabilities play out, sometimes you can be stopped out or have a conditional order to buy back only to see the stock go back up. So the reason why someone does this is they're trying to keep the odds on their side. Stock stays above the strike, odds are on their side. The strike that we picked was the support level, okay? And so what we did there is we said, hey, you stay above the strike, you stay above the support level, don't mind the commitment. If you go below that strike and or support level, we do mind the commitment. And that's why there's a pending order. Okay, yeah, Wiley, thanks so much for that. Telling me that I need to call the help desk. Okay, yeah, there you go. All right, any questions that you have? Okay, any questions? Now, are there any stocks that, for example, that you want to pull up that you saw in the paper money account as well? And what I'm going to do is I'm going to pull this back up. Now, as I'm kind of getting some other ones, I want us to kind of keep an eye on, for example, when you look at Meta, we talked about this earlier this week, that has been a stock that really has not gone down that much. Now, littered all over this chart, you get a red-green candle. Ladies and gentlemen, boys and girls, welcome to a higher low. Red and green candle side by side, higher low. Red and green candle side by side, higher low. Red and green candle side by side, higher low. So notice how we're getting some step up on that chart. There, being a little bit higher than before, little bit higher, and a lot higher than where we were before. So Meta is one of those things where you say, well, what kind of, in terms of geopolitics, did it have any effect on Meta? The answer is not that much, okay? Now, let's go back to just real quick. Okay, so one of those stocks that we did have in there, I believe, was CrowdStrike, okay? So if you look at CrowdStrike, we had a position on that. We had short puts on that. We had shares on that, and came out smelling like roses on both. Now, it got a little ugly there for a second, but it came out fine, okay? I think it was $1,500-$1,600 on that. Now, if you look at, let's say, CrowdStrike, and what, by the way, I have this on my list as well, okay? Why is this maybe an area of interest? Well, this is kind of at that bounce spot, right? Where if we kind of went back and said, where do we see kind of this old area? That Ben always talks about old high being new potential floor, okay? Or old resistance being new potential support. Now, could we do the exact same thing idea with this? Could we just go ahead and maybe try to trade a bounce on this and see if that holds? Well, sure. Okay, now what I'm going to do is I'm going to kind of set this. We're going to do this as a stock example, okay? We're going to take this 276, okay, 276.03, less 2%, 270.50, okay? 270.50. Let's go back and make sure that's true. Okay, that's correct, okay? Second, what was the old high? Okay, that old high was really 299 and change, okay? So I'm going to put that old high 299 and change. We're not saying that's all it can go. All we're saying is we're going to try to make it the highest probability that it could swing, it's not swing, swing back to the old high, okay? Well, if we go, now, by the way, you can look up on the option table, look at the strikes. You could actually put in there probability of touching. I always kind of think this is kind of interesting, to be honest. If we kind of said, hey, what is the likelihood of that stock going to the target, let's say, in the next 15 days? Okay, so if I set a target at 300 or close to that, because that target is there, what's the likelihood in the next 15 days we go to that 300? About 52-ish% chance. Now, if we give it more time, could there be a greater chance that it could go to the target? Answer, not 100%. It's about 71% chance. So here's the deal. You know, if you struggle with kind of having some targets hit. You just might be setting really targets that are quite high. Okay. So are we thinking the next 2 weeks it could really get there? It's a 50-50 shot. That's why a lot of times we talk about trades that are at least 2 to 3 days to 2 to 3 weeks, but really trying to give them 20 plus days to work, because we like that 20 to 50 day time period where instead of just being a 52% chance of actually hitting it, that if we actually kind of maybe think that maybe it might take some more time, maybe a 70% chance of hitting it. Now, you got to remember, when you say 70, it means 30% chance of not hitting it, okay? So remember that. So that'll be our last trade example on CrowdStrike right there. Trying to get a little bounce here as well. Yes. Now, I want to also go back to and just kind of make mention, this is not a one-off class, okay? So this class, you can follow us right on Trader Talks by Schwab, the Schwab Coaching Webcast on YouTube. We post all of our content, ETF classes we have on Monday and Friday on YouTube. This class also has, and other classes have their own playlist. So kind of think of it like a TV channel that you like, shows you like to watch. Same idea. If you said, my gosh, I wouldn't dare go through a single week without seeing a class on trend trading. Well, you could see all the past episodes on trend trading. Okay, so follow us. Now, also remember that you can also follow Mike in his classes as well. So check those out, and other classes. You can find us on Schwab Coaching. This is the link there. Okay. Helen says, do you take a vacay, JP? I really try not to. Tomorrow I'm off, but I'll teach in the morning. Wednesday I was off, but I taught in the afternoon. If I'm going to be here at the house, why not? Let's just go for it, okay? So I try not to take too many vacations. Don't need vacations, okay? Vacations are when you're sick of what you're doing. I like what I'm doing. I'm just joking with you, just making sure you're listening. So remember, with what we discussed here today, it was done for example, illustrative purposes only. Also remember that coming up next at the top of the hour, we'll have a new session, so stay tuned. This has been the class on trading the trend. I wish you a great day, and thank you for all the birthday wishes for Jax. And he says, ruff, ruff. He says thank you. Okay, have a good day. Bye-bye.